Wow, what is the market doing? So many people are looking forward to see new highs. Some are hoping for new all-time highs, but at least overshooting the September levels. Early in September, we had some highs, and then the market will continue. Some people are really hoping for this. Others are thinking, yeah, no, of course, we will reach this level soon, and this will start the next bull market. But what we've seen before this weekend was not really convincing. So let's have a look on the chart and check what we could expect, what the probabilities are. Is the bull market still valid, or shall we expect something completely different? And on the other side, how shall we react as a trader? So let's stick with the market and let's have a closer look. Okay, let's start with the Dow Jones. In this case, the future. All the contracts I'm showing to you today, or the charts I showed to you today, are the future contracts, the CME traded Dow Jones, the Nasdaq, and the S&P. And it's all the December contract, to be sure. So if you trade something else in some countries, maybe a CFD or an ETF or some contract, whatever you prefer, you may change or check the prices. It might be a little bit different, but on the other side, the levels concerning the highs and lows might or should be the same. So please check it on your individual chart as well. So let's start with the Dow Jones, and we see that we had still the situation that the market had a setback, which is not deep enough to make me really think or believe that this is the end of the correction. We had this in one of our former videos, so I don't want to dig too deep here, but you can see this is too fast concerning time and too high concerning price to be a very typical setback. Just having a short glance, this setback here, for example, if this is a zigzag to the upside, but it's roughly the same if this is an impulse. So this second wave setback, we can measure this, the second wave in comparison to the first one. We can check this and we can see, okay, typically it should be somewhere around 40%. It can be even 30%, but you can see the probability is way higher that the low is to come. And the same is valid for the time. So it is not very typical that this is the end of this setback. We can expect something more. So if this is really what we can expect, something like an 1, 2, 3, 4, 5 to the upside and ABC to the downside, this is not very typical. So I suggest to expect something like this, or maybe after a continuation a little bit higher after that. So this is still valid. If this is the case, if this is really going on currently, we need to have something like an ABC to the downside. Yes, check, that's what we got. And we need something corrective here as well. So the first question we have to solve is this a corrective pattern, what we see here? And if we have this in a closer or more detailed look, we can see here in an hourly chart, for example, this is exactly the same, but on a higher resolution, so we can easier understand what the movements here. So I bring it up a little bit, and I'm always talking about overlapping. So let's see what overlapping is. We started here. That was the lowest point here. And you can see we had a setback here, and 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 we had a setback here. And we can see that this low is lower than this high, and this low is lower than this high, and this low is lower than this high. This is higher than that one. So here we did not have any overlapping, but this setback and at least this part of the setback is overlapping. This part and this part, oh no, I'm sorry, but parts of it were overlapping. And the same here, if you compare this one, we can see here is the overlapping with this part here. So this is giving us a clear picture. This is an overlapping price pattern. And we know a typical impulsive, a strong movement into one direction should look something like this. No overlapping. You can see we had setbacks here as well, no problem at all, but no overlapping because there's a big distance between these lows and highs here. And this is very typical because Nobody wants to see the market fall again. If the market is falling, no, I want to buy, I want to buy, I want to see the market is gaining again and coming up. Yeah, that's an indication for a strong market. But this was not exactly what we got here. This was, yeah, it looks good. Ah, no, I'm not sure. Ah, it looks good. Perfect. Dangerous. And we can see we had so strong setbacks. You can hear it. You can really hear it if you see it, that the market participants were not really satisfied with what they got from the fundamentals, from whatever inputs they had. But they said, oh, no, let's go back. It's really dangerous. And overlapping is typically something like a corrective pattern. So in this case, the up move is corrective. So let's bring it together. If we compare this to this chart, we had an ABC pattern here to the downside. Yes, confirmed. And we had some corrective pattern here to the upside. Corrective down, corrective up. And there's something which might lead to this one. It's the only pattern here which is typically bringing something like this, which is a typical flat pattern. It not necessarily need to be a three-wave pattern, but corrective down, corrective to the upside, and strong to the downside. If you're not sure about the B wave, we can check this. The B wave can be a typical ABC, like this zigzag or double zigzag, but it also can be something more complex, like a triple zigzag, and you can see it's not really rare, or other corrective pattern, which is a little bit more difficult to understand, but you can see this can definitely happen, and it's not really rare that this happens. So yes, we can confirm if this is corrective down, confirmed, and this is corrective up, confirmed. This pattern is very, very typical, and we know this kind of pattern is coming very, very often. It is half of all the corrective patterns are looking roughly like this. So this is something we should still expect, even when the market is overshooting, because we know this pattern very often is overshooting the last high, which is here. So something like this, and it can be even higher, could be even above 3,000, even something like this could happen, but would lead us to lower prices later. So if you're on the bull side already, if you have your positions maybe in the future or stock positions currently with the blue chips index, then you not necessarily need to close all of it now, because this can still happen. And even with lower chances, even this can happen. But probability is not very high for this. But this is no reason to sell the market short at that point concerning this picture. So I could recommend trail a stop, for example, using a parabolic. You can have any other idea. Maybe you have a good stop idea or trailing stop idea already, but I recommend, if you don't have any, you can simply use something like a parabolic. It is not perfect, but as long as the market is strongly moving, you can see it here, for example, or you can, here you cannot see it clearly because it's not too long data in this case, but as long as the market is moving strongly, this is keep your position running. But when the market is not proceeding to the upside or downside, depends on the direction, then you got stopped out. And this is something working here as well. So as long as the market is moving upward, no need to hurry, but you can trail the stop quite tight. Or you can stick with the super trend. The super trend is also working really similar. Typically, the super trend is giving you more chances to keep a position running. But on the other side, when the position is turning, it costs a little bit more, because the gap between the points here, so the trailing stop idea, and the current level is a little bit bigger. So it's up to you to choose between both of them. I normally choose the wider one at the beginning of a move, and when I expect the market to turn, I change to the tighter one. So in this case, I would prefer the tighter one, because I see we have a good chance that the market will not proceed very far anymore. But this is sometimes leads me to close my position, and I have to reopen. Maybe this can happen. Don't be angry if this happened, but this will protect you to suffer from something like this, because it's not only like this what we can expect. It can be even lower, because this is only the first level here. You can imagine it could easily go to 50%, 24,000 roughly, or it can be even deeper and going to below 23,000. This is also possible, but probability is going down again. So roughly, if you remember my red levels, my red curves, it is looking something like this. So you can see, okay, probability for levels here is not really high. It's a little bit wrong, but it's not really high. So you can say, okay, the highest probability is roughly here. Maybe it's a little bit higher in this case, but something like this we should definitely expect. Okay, that's what we learned from the long-term picture. No, not so many news here, but this part is now more defined. We can see it here more clearly that the market is not coming up here in a really strong manner, because we have too many overlappings. And on the other side, if we switch to the intraday chart, the hourly chart, for example, or even the 5-minute chart or whatever you like, you can see that the market is again strong to the downside, maybe something like an ABC pattern here, and coming down strong here. And you can even see on a 5-minute chart, you can see, okay, it is a really typical behavior we always expect. So what can we do in this case? I would sell short, and not only I will sell short the market as soon as the market is giving me some really nice corrective pattern to the upside and triggering the lower end, which is giving me a good opportunity to trade the continuation. It is roughly like this. This one is stronger than this, what we had here. So this might be a typical opening for opening a position to proceed into the direction of the market. So this is the raw idea behind this. It's quite easy. It's not really tough to see that. Of course, you can do it a little more sophisticated. We come to this because I want to introduce some different trading ideas with the Nasdaq future, because I think there are some good opportunities, but it's roughly the same in this market. And if you prefer the Dow Jones or the S&P 500, you can, of course, try to find the same pattern there as well. Maybe it's important to understand sometimes it is lovely in one index, but not really clear in another. So if this is the case, I switch to the other one. I switch always to the clear picture. I don't stick with the ugly one because I prefer this index. No, I'm absolutely free which one I trade. It depends only where's the pattern, the best one, where can I easily understand what the market is bringing up currently. So let's compare. What is the S&P 500 doing? And I'm also having here the E-mini S&P 500 December contract. You can see it here. Please check your levels if you prefer another contract. But this is the broad market in America. And you can see the idea and the problem is roughly the same with the S&P 500. But here, is this really corrective? Because this setback we have here is not overlapping with this one. So currently, we are clear of conflict, let's say it like this, as long as the market is not coming below that level. And some people might think this level. This depends a little bit about the counting, because we have some ideas how to count this. It looks like an 1, 2, 3, 4, 5, and something like an ABC to the downside. It can be something like this, but also some other ideas how to count this. So that's the reason why I think, okay, below this level, it might be a little bit dangerous, but below this level, definitely we have an overlapping, whatever my counting will look like. So I would say, okay, this overlapping will kill my bullish mood, and this would make this as a corrective pattern to the upside, leading to the same conclusion that the market needs a drop. On the other side, we can ease it up a little bit. If you're not sure about the counting and all the things we were talking about normally, you can just think we had a really shaky move here. It is something going back, forth, back, forth, back, forth. So this is something like a really unclear situation roughly around here, this level. But before that, it was quite strong. And after that, it was quite strong. And something like this looks quite similar to something normally like this, which is a typical ABC. If you want to see this in a neutral drawing, you can see it is roughly like this. A strong move to one side, ABC down, and the next one to the upside. It could end anytime now. But it could be something else as well. This one, strong to the upside, very shaky, having a pause, and another one, having a pause, and another one. So we have picture number one, something like this. Picture number two, we have something like this here again and continue to the upside. Currently, we are not sure whether the market will do this or that out of this picture. Absolutely not sure. So we have to have a closer look at this, what we got here, to have an idea what the market is bringing on currently. And if we go to the lower time frame, for example, 50-minute chart, or you can take the hourly chart as well, but we can see we had a quite strong move to the downside and something which might be an ABC pattern here. And even if you don't think you want to check this one, you can think about this one, ABC to the upside and continuation to the downside. So we have good indications currently that the market is not really strong. If the market is not really strong, it would lead to lower prices. What would we expect to see if the market is not strong to the bull side? All up moves are ABC pattern or quite shaky. We don't know which we have to expect, but as soon as you see this one or this one, you have a first impression, strong to the downside, but weak to the upside. Similar like here, strong to the downside, weak to the upside. I can sell short the market. It is always the same. You can see it here, and even this part we were looking here is only what we've seen here. But you can also see it here, strong to the downside, shaky to the upside, continuation. Shaky to the upside, continuation. ABC to the upside, continuation. So this is something you can see in a 4-hourly chart. You can, of course, see it sometimes in a bigger chart, A, B, C, and continuation. Sometimes you don't see it, but if you see something like this, you roughly know what they're bringing on. And you can see this on a really low time frame. So to make one thing clear, if I see something, let's say in a different way, I need to see 3 things to make me at least happy to think about a trade. One is a first strong move. The second is a weak answer. Weak can be shaking several times with overlapping situations or like an ABC pattern. Both is okay for me. But this is not enough for selling short the market. The third is I want to have a small proof, something which is convincing me that the market participants are really changing the mood, and this is breaking the last level. So if it's an ABC, it was this one. If it's something like a shaky move to the upside, it is the last low. This is the last high, the previous, and this is the low in between, which is giving me a good chance that we will see this, what we've had here, that we will see this again. And this would fit into the big picture, which could lead the market to lower ends at any time now. Not necessarily at the first glance, it can be something like this only and continue then to the upside. But I can see, this part is something I can trade. That's really important. I know many people say, no, I want to make sure, will this happen now or only this one? It is only guesswork. Believe me, there are too many opportunities for both of it. The good thing is, we as a trader, we don't need to see the crystal ball and see what the market is doing next. It is only, in both cases, we would expect this or this. So selling short would give me the opportunity to be a winner at all. So in all cases, you can take profits here. So you're safe if this is happening, or you can take profits half, so only half of your position here. So if this happens, you are positive, but if this happens, you have even bigger gains here on the short selling side. Or you can trail the stop. Everything is more or less often working wonderfully. And really important, more or less often. It's not in 100% of all times. But you can imagine if we have a stop roughly here. If you follow me a little bit longer, you know I'm not having my initial stop above the last high. I have my initial stop 78% away. I will bring it up in another video later. But roughly, this is my stop level. And my target level should be somewhere here. So if you just compare, this is my risk and this is my profit. I don't need to have 50% win rate. I very often have 50% win rate or even more. No problem at all. But you can see even then I will constantly make profits. Not at every trade, but even every second trade gives me way more profits than loss. And I did not talk about the big targets here. I only talked about the minimum targets here. So you can see this is really, really a good idea to trade something like this. You can add your own trailing idea behind that, trailing the stop, but you can see this normally should work. But this is the S&P 500, but I have another one, the Nasdaq future for you, and I have several trading opportunities here which I want to show you. The first and the easiest one is in the weekly chart here. I know this is something really for the longer term prospects, but what we see here is something like a shooting star. I confess it's not my preferred trading style, but if you want to open a small position just to see what the market is doing, normally this very often leads to turn the market when breaking the last low. Many people don't realize this pattern in this case because it's the bar chart. So let's switch to the candlestick chart. You can see we have a really small body and we had a long tail to the upside. So in this case, the market came from below. This is a shooting star, and some people are trading exactly this. When the market is breaking through this level, it should continue to the downside. Take care, this is not indicating that the market will go here. This pattern only indicates as long as the market is not overshooting the shooting star, we should expect something roughly same size like that. So my expectation is here more or less a one-on-one situation. But on the other side, we said we had a good chance that the market will bring on something like this, this, and this. So we not necessarily need to close our position here, but when the market reaches this here, we should trail our stop to roughly our entry level because it is dangerous that the market may turn around again, and I don't want to suffer from a strong market again and lose some money. So if you want to trade something like this, it's a really easy one. It's on a weekly chart. You can just find out the last week's low. And this is the trigger level for selling short the market. The stop should be above this level, or if you already know, you can think about trailing the stop or setting the initial stop a little bit lower. Let's say the 78.6 level here, which is roughly, please measure with your own contracts you want to trade, 12,120 roughly. And targets, minimum targets, let's say 11,200 with chances for even lower levels, 10,200, 10,000 maybe. I'm not sure about that one, but this is only one idea. So this is not the highest recommendation, but this is something many people are trading. So if you trade like I do, I have many trades open at the same time. So if one is doing wonderfully, the other one is maybe stopped out, but you remember risk-reward ratio is on my side in this case. So I don't fear that the market is giving me bad results. But this is only one idea, which is perfectly fitting into the overall picture. We had an ABC to the downside, ABC to the upside. And now, if you have a look at the hourly chart here, you can see we had a really strong move to the downside with two different, let's say, countings. This can be a five-wave move here with a corrective up and a continuation to the downside. Roughly same length here to the downside. The problem is, in this case, this possible fourth wave is quite short to combine to this one, or compared to this one. On the other side, we can compare this one to this, which is also not really perfect because this is way bigger than this one. So we have two countings. The other one, beside of what I've drawn before, is we have 1, 2, 3, 4, 5, which is giving us also a down move. And after a 5-wave pattern in this size, we should expect something like an ABC or ABC let's say something like an overlapping pattern, like this, roughly like this. It's not drawn perfectly, but you can understand, with a trigger here and a continuation of this pattern to the downside, which is also leading us for lower lows. So whatever the market is bringing currently, it looks like a continuation to the downside, which easily can bring us, even for the smallest setbacks, down nearby the 11,500 level. It's a one-on-one perspective. But even if this is the 5th wave coming here and then a corrective pattern is coming, we can expect something like a setback, let's say roughly 11,700. This is the one-on-one of the first wave, which is too short because this is not going below the 3rd wave low. So I would kill this level. And we can measure the whole move from here to here. And of course, this is bringing us a 100% level. This is also not eligible because the market is not, in this case, this level is higher than this low. Can delete it. So the first support level would be roughly around this level, 11,700. This would bring up 1, 2, 3, 4, 5, A, B, C, and then the continuation to the downside. The second one is going to the A, B, C level here, maybe continue to the downside or bringing here something like a corrective pattern, but at least levels roughly around this level, which is 11,500. So we can see that the market is still on the low side, on the downside currently, and this is confirmed even by the shorter time frames. You can see that this is again strong move to the downside. We had an up move here, and this for example, this is the last intermediate level. You can see, okay, last high, previous high. This is an entry level, and something like this. I'm sorry, the wrong button. This is the first move, and this is the continuation, and roughly there the last week ended. So you can see the market is currently definitely strong on the bear side, and it has all it needs to go even lower than that. So if you're in a bullish position, think about trailing your stop a little bit tighter than usual, because we have a good opportunity that the market will continue. On the other side, find something like this, or find something like, let me delete this one, this here, which is giving you an indication for an end of a corrective pattern to enter the market into the direction. The same like we had so many times here on the bull market, strong to the upside, ABC to the downside, strong to the upside, ABC to the downside, but also 1, 2, 3, 4, 5, ABC to the downside, expecting that this will come again. And yes, it came again. Please don't rely this will work in 100% of all cases. No, it would definitely not. Trading is a game of probability, but chances are quite good, and you can easily understand if your target is roughly here and your entry point is here and your initial stop is not here but a little bit higher. This is your initial risk. This is your expected target. You can see risk reward ratio is good. The system, the idea behind the trading idea, the setup is always the same, and you can easily understand how to deal with it. I hope you could get something out of this video, and I hope that you can use it for your own purpose. Maybe you can find a good trading idea by yourself, or you can try to copy parts of it for your next trading. And I hope that you are successful with all of this, and that it's really useful for you. So if you like this video, please press a thumb up. please press the subscribe button and come again. Press the bell to be informed when I load up the next video. I will bring up more and more in the future, so please stick with me. Please give me a little bit more time to give more input here on this YouTube channel. I will bring, of course, trading ideas. I bring situations which I want to talk about. It could be precious metals, for example, gold, silver. But I also want to bring up videos about Fibonacci, about the Elliott waves, about other things which are important. So stick with me. Don't forget to subscribe, and crossing my fingers for you. Bye bye.